Hey everyone, hope everyone's having a good day. Today I'm going to be starting a new series actually. Um, and the series is going to be about different chart patterns and how to trade them. It should be relatively short videos, but I'll be doing a bunch of videos within this series. So today I'm going to be doing head and shoulders chart pattern and talking about it and how to trade it and what to look for and whatnot. But first, before I do that, I'm going to quickly describe what a chart pattern is, just so everyone who may be new is caught up and familiarized. So a chart pattern is a recognizable candle pattern on a whatever chart you may use, whether that's TradeView or whatever, that is repeating and that you can use to predict and trade ahead of time. So you guys will probably have a better grasp of what exactly a chart pattern is after this video and after you see what head and shoulders is all about. But head and shoulders is just one of many chart patterns. There's a bunch. So, but we're just going to start with head and shoulders on this one. Okay, so the first point I want to touch on is what exactly does head and shoulders look like on a candle pattern? Okay, so for anyone who might be familiar with head and shoulders, this will probably just be a review for you. But for the people that aren't familiar with head and shoulders, this is kind of what it looks like. So you'll have your uptrend here, and then eventually it'll kind of even out as such, and then it'll start going down again. Okay. So as a whole, it kind of just looks like it's going up and then down, so nothing too crazy. But head and shoulders is right here actually. So you got your left shoulder here, your right shoulder here, and your head. You can see. So it kind of looks like a head and two shoulders. And so I'm going to quickly show you guys what that might look like on a graph. Okay, so here we are. It might not be very obvious to once again the new traders here, but we have our head and shoulders right here actually. Okay, so I'll circle it first. So right there is our head and shoulders, and as you can see, we got our left shoulder here, we got our head, and then we got our right shoulder here. Okay, and so as you can see, it's kind of building up to it before it happens, and then once again, when the right shoulder ends, it drops. So this is one example of a head and shoulders chart pattern. There's a little more to it, and we'll get into different aspects of the head and shoulders and how you can trade it and what to look for and whatnot. But face on, this is just what head and shoulders looks like. Okay, so to touch on some components of the head and shoulders, so the first thing I want to touch on is there should always be a support line right there. Okay, so this is also referred to as the neckline, which kind of makes sense, right? Underneath the head would be your neck. And then as well is your two shoulders should make a resistance line. Sorry, I kind of drew a bad resistance line there. But realistically, your two shoulders should have the same resistance line. And what you guys will learn on later on is it doesn't always need to be exactly the same, okay? So a head and shoulders could kind of look like this, where that's one shoulder, this is a head, and then this is another shoulder, where this one might be a little higher than that one, right? This isn't exactly quite the same resistance line, but relatively they should be in the same area. Another thing I want to touch on is head and shoulders can also be reverse, okay? So this is also a head and shoulders. So as you can see, you got your left shoulder there and your right shoulder, and this is the resistance line, or I guess it would be your support line in this case for the two shoulders, where this is the neckline. So this is kind of what a head and shoulders looks like face on. Once again, you guys saw on the chart pattern I showed you earlier. But now we're going to touch on how to trade head and shoulders, okay? So there is a specific way to trade this that will make it most efficient for you guys, and that's what we're going to touch on. So the number one point I want to touch on, and probably the most important point that a lot of people get wrong while trading head and shoulders, is you want to be trading in a consolidating market, okay? And a refresher on a consolidating market is just you have somewhat normalized support and resistance lines, and it's not heading in one clear direction, whereas a trending market would be more so in a clear direction, as you guys can see. But so you want to be trading in a consolidating market, okay? Reason being is in a trending market, it's oftentimes hard to tell the strength of the trend, okay? So in a trending market, you will get times where it looks something like this, right? And you'll be right about here where you have your head, your shoulder, and your shoulder, your head, and your other shoulder. And you would think here it might go down, but since it's in this trending market and it's a strong trend, it'll just continue to go up, okay? So the best way to trade is in a consolidating market where there's lots of changes in directions and the strength of a direction isn't going to affect your trade. Another thing I want to touch on too is I already said this a little bit before, but your shoulders don't need to be in line, okay? So this could also be a setup for head and shoulders where you got your left shoulder, your right shoulder. And notice how I said before, your shoulder should be somewhat in line. It doesn't need to be perfect. It just needs to be somewhat in the same direction. And your shoulders should definitely be below the head. So the optimal trade entry on a head and shoulder is right around here, right around the bottom of the shoulder. Oftentimes, you'll see a little bit of consolidation before it changes direction, which makes sense, right? Because markets often go from consolidating to trending market. So it'll consolidate in this area for a bit. And once you start to see it just about changing direction downwards, that's when you want to place your trade. You don't necessarily want to place your trade right here. You want it to consolidate for a little bit. Keeping in mind, the longer it consolidates, the more risky, the trade might not happen, right? The more risky it'll get to trade there. If you're trading traditional forexes, your stop loss should be right around the shoulder length of whatever shoulder. To be honest, once again, they're going to be relatively in the same area, but I usually do the highest shoulder. So if the left shoulder were to be a little bit higher here than the right shoulder, then I would do this guy here as my stop loss. So here's just another example of a head and shoulder candle chart pattern. Right here, you can see actually a reverse head and shoulder, which is quite interesting and often people miss. But so you got your head here, you got your shoulder and your other shoulder. And as you can see, the neckline would be right about here. And so if you were to put a stop loss, it would be right in this direction here, right on these guys. And then obviously your take profit would be somewhere around here. So as you can see, this one actually didn't consolidate at all before changing direction. So if you were to wait for that consolidation and realize you kind of missed out on the trade, what you can do is you can trade on the first pullback, okay? So what a pullback is when a market's going in a certain direction is these guys here, okay? It's just the brief changes in directions in a trend. So the only real pullback I see here, and it's not even really a clear pullback, but it would be this guy right here, right? So it's going in an obvious trend, and then there's a minor pullback here. So if you were to wait for the consolidating period, but it obviously didn't consolidate, what you can do is trade on the first pullback. So here's just the last example I'll show you guys of the head and shoulders. There's a one right there. And so left shoulder, right shoulder, head, and then the neckline right here. So once again, I would put my stop loss right around here in this area. And then your take profit, depending on how risky of a trader you are, would be somewhere down there. Once again, this one didn't consolidate at all. So if you were to take my advice on the last one and trying to trade on the first pullback, obviously that wouldn't have worked out, right? So once again, that is the something you should keep in mind, to where if you are going to trade on the pullback or you are going to trade on the consolidating period, you just want to make sure the longer you wait, the more riskier it'll get. So we're on the 1 day candle chart here, right? And so you'd have to wait 1, 2, 3, 4, 5, 6 days for that first pullback. And so once again, like 6 candles, I guess, is obviously a little bit too much, but it would be up on the first like 3 or 4 candles, to where if there's a little bit of pullback, then you can still get in on the head and shoulders. That being said, if you were to trade on the first pullback or the first time it consolidates downward, you would want to set your stop loss a little bit lower, just because it is a little bit more of a risky trade, right? But anyways, guys, that's all I have on the head and shoulders chart patterns. Thank you guys for watching so much. If you like the video, please leave a like and subscribe as well. If you have anything to ask me, you can leave it in the comments section, or you can email me or message me on Instagram. Both of those will be in the description down below. But anyways, guys, thank you so much for watching and have a great day.